Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar, Index Research Specialist with Nasdaq Investment Intelligence, to discuss the impact of AI and big data on the labor market and net economic activity, as well as an index that gets investors exposure to the opportunities, the Nasdaq, Global AI Big Data Index. Sanjana, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. Thanks for having me here today.
All right, you got it. And let's set the tone here. What is the impact of AI in big data, and why are there opportunities within the broader macro space?
Sure. So leading companies today are tapping into the massive potential behind AI and big data. We have new use cases that are proliferating. The cost curve of AI is rapidly declining, and the impact on the socio-economic and political landscape is game-changing. Going forward, AI is expected to contribute trillions of dollars to global output and disrupt the labor market as well, with hundreds of millions of jobs being displaced. On a net basis, however, we find that AI is going to be beneficial to overall economic activity. And to this end, the index that we have, the Nasdaq Global Artificial Intelligence and Big Data Index, is very well positioned to capitalize on this broader shift in economic activity.
Let's take a look at the index composition, constituents, and methodology change here.
Sure. So if we look at the index composition here, we see that this index was launched in November 2018 and currently tracks 96 securities, which are equal weighted. And at the July reconstitution, there's going to be a slight modification in the methodology. We will have the index switch to a modified float adjusted market cap weighting scheme with a 4.5% cap on individual securities. And what's also interesting is that there's going to be an ESG overlay going forward. And if we look at the index composition, you can see that the top 10 index weight contribute only about 15% of the total index. So you see that it's not very heavily concentrated at the top. And some of the top 10 names that you see here are Plantronics, which is an electronics company that produces audio communication equipment. We have VMware, a leading cloud computing and virtualization technology company. And we have Baidu, which is a large Chinese multinational tech company. So very healthy representation of tech and telecom.
And if we take a look at the returns of the top 10 index weights, what kind of trends can you tell us about?
Sure. So while the NYG Big Index was down about 27% year to date, you see 7 out of the top 10 names actually posted strong positive returns. You see companies such as Plantronics, Orange, and Telia emerging as top performers, posting strong double-digit returns year to date. And for fiscal year 21, we see companies such as BT Group, IBM, and Inventec posting strong double-digit returns as well. And what this suggests is that there was relative resilience among the top 10 names.
And if we take a look at the market cap exposure and geographic exposure, you can see how there's diversification within this index.
Yes, and that's something that we'd like to flag as well. If you look at the index, you see that about 58% of the index weight comprises of companies with a market cap above 20 billion. So it does have a large cap tilt. And the rest of the index, you see about 18% of the index comprising of companies with a market cap between 2 and 10 billion, and only 10% of the index weight with companies below 2 billion. And we believe that this large cap tilt might set the index well up in a high inflationary environment. It might perform well in a high inflationary environment. And in terms of geographic diversification, more than 2/3 of the index weight comprises of companies that are domiciled in the US, and about 1/3 consists of companies that are domiciled outside the US. And again, this geographic diversification might serve to offset some of the drawdown potential in thematic tech, since US indexes tend to underperform international benchmarks.
And Sanjana, what about the subsector exposure?
Sure. So if you look at the subsector exposure, not surprisingly, many of the companies belong to the tech sector. You have about 38% of the index comprising of companies specializing in software. You have about 16% of the index comprising of companies specializing in consumer digital services and computer services. and about 9% of the index comprising of computer hardware. Also wanted to flag that semiconductor and telecom also contribute meaningful index weights. And if you look at the rest of the index, you have sectors such as banks and retailers and entertainment also making meaningful contributions. And what this tells us is, what this indicates is how revolutionary AI is today. I mean, innovation in one subsector is likely to have a domino effect across other subsectors.
And finally, how does the Nasdaq Global AI and Big Data Index perform relative to peer?
Sure. And this is something interesting that we'd like to flag as well. On a relative basis, the NYG Big Index has outperformed several competitor index products. While the index was down 27%, other index products were down 30%, 36%, and 39%. So when you look at the Robo Global AI Index and the FactSet and Big Data Refiners Index, you see that the NYG Big Index has shown relative resilience in a volatile market.
All right, Sanjana, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.